All right, welcome. Good morning. What a warm welcome for my wife Shanda and I to your great state of New Mexico, the great city of Santa Fe. It's our first time in Santa Fe, and I want to thank Peter, Harold, and Angela. They have sure rolled out the red carpet for us. They directed us to all the finest eating establishments. My mouth is still burning from the chili. It's very, very good. We love hot food, so we love, my wife loves shopping, and there's definitely plenty of that here. So my checkbook is not thankful, but I'm very thankful. So first and foremost, I always like to start with my family, and it starts with my beautiful wife. She's not just here because she's my wife. She is my secret weapon in the legislature, and the legislature is my shareholder group. I like to say it's the largest, most complicated, most opinionated shareholder group that you could ever have, and she's been the Secretary of the Senate there for, boy, I don't know how long, a long, long time. And if you're not as familiar with legislative groups, it's really the secretaries and the clerks and whatnot that kind of make everything run and kind of are in the know. So she truly is my secret weapon. My family, I've got 4 kids. I've got 2 in college. My oldest, Jaden, he is, I think he's going to be a banker. I'm really hopeful. My second one is Kyler. He's definitely more wired like my wife, more the entrepreneur, more the visionary, less banker-minded. He's out in Cal Poly on a rodeo scholarship. And then my 2 young ones, Shada and Kazin, they're going to school in Bismarck. Shada's in figure skating. And Kazin, I got really lucky, is my hunter and fisherman and football player, and so we have a lot of fun with that. That's a picture on the Blackleg Ranch. The Blackleg Ranch is also a big part of our story. It is a large 24,000-acre, 6th-generation ranch founded in 1882, homesteaded in 1882 in North Dakota. The cool story about that, though, is it is a national award-winning regenerative ranch, and it's leading the way for not only the state, but the nation in agriculture and regenerative practices. So think soil health practices, rotational grazing, livestock integration, cover cropping systems, winter grazing, that really focuses back on soil health so that it not only produces a better, more healthy product at the end of the day, whether it's crops or whether it's livestock, but it also helps that operator be more sustainable because the soil is doing more of the heavy lifting. You can use much less fuel, oil, tractors, repairs, labor. It's a beautiful thing. It's a beautiful grassroots thing happening in agriculture, and it's a big part of my story and Shanda's story, and it really ties into banking in North Dakota as I get along here. As Angela mentioned, 25 years in banking for me, most of that in North Dakota community banking. And when I say banking, I include credit unions in there. It's just easier to say banking rather than just say banking and credit unions. It's too many syllables, okay? So when I say banking, I include all of it. But I've had 25 years, very passionate about North Dakota, very passionate about community banking, very passionate about agriculture. And so anytime I get come to ask to share the story of the North Dakota model of banking that we have, it's very easy for me because I'm passionate about it. And I love telling the story, and I love the fact that so many states like New Mexico are looking at our model and looking at some form of replication of that, because I truly believe in the health of our states as the health of our nation, and I believe our model really improves the health of North Dakota, the state of North Dakota, and it's done that for years, and I'll show you examples of that. But I really think if you can be successful in your states with a model like ours, it is a great tool to help your state be more healthy, which is going to help our nation be more healthy. I'm going to leave plenty of time at the end for Q&A. I think about 45 minutes of Q&A, so I think, and I hope you guys have lots of questions at the end. I'll hit high level through my presentation, but I won't be able to hit everything. I could speak for 3 or 4 hours up here about our model because we're doing that many things, right? But to start out talking about Bank of North Dakota and our model, you've got to go to our founding. And our founding was in 1919, and you got to go to our founding documents. And for those of you here on site, hopefully you saw on the back table, we have our founding documents that we printed out in a booklet for you. And these are the actual typed up, approved founding documents of the bank. And there's some key things in there. The first key thing is our governance framework. And it was, the folks at the time were very brilliant in how they structured this bank because they were able to somehow look ahead into the future and foresee potential problems. They inserted what's called the Industrial Commission and formed the Industrial Commission for us. And that's a 3 elected official board that oversees not only the Bank of North Dakota, but other things in the state like the Department of Minerals, the State Mill and Elevator. It's made up of the governor, the Attorney General, and the Department of Ag, the Ag Commissioner. Now the Ag Commissioner is on there because North Dakota is such a ag-reliant and ag-heavy state, and really was, at least up until the Bakken oil play took off, and now we're really an oil and gas state, but agriculture remains our second largest industry, so that's why the Department of Ag and the Ag Commissioner is on there. But it was formed to oversee all utilities, industries, enterprises, and business projects, of which Bank of North Dakota is one. And I'll tell you, when I get into the governance framework, which is so critical, they replicated the private industry. So if you think of the legislative group as the shareholder group, okay, this would be the independent board of directors. And in private industry, that independent board of directors is really important to protect the organization. It serves several roles, right? It provides oversight of the organization and management that it's overseeing. It also protects against activist shareholders getting in the way of that organization succeeding. So it was really brilliant that was put in place over 106 years ago, and it's been really critical today. Our mission from 1919 has not changed in 106 years. It's the same mission we have today, and I've got 187 staff members, and you could go ask any one of them what our mission is, and they'd be able to tell you we simply exist to promote North Dakota agriculture, commerce, and industry. That's what we do. It's simple, right? This gets really complex, so the more we can simplify things and rally around them, the better. So the core of who we are, we simply exist to promote North Dakota, and that's right in our founding document. Also, some important verbiage in our founding documents, which is really, really critical to our 106-year success, is the fact, and I typically don't read a slide, but I'm going to read this because this language is really, really powerful. Bank of North Dakota will need the support and cooperation of all the people, as well as of all the banks and other financial institutions. That's key language right there, of all the banks and financial institutions of the state. On its part, Bank of North Dakota does not propose to enter into competition, and we do not, that's right in our founding docs, with existing banks, or to supplant any part of the existing financial system. Very, very critical. But to cooperate with, assist in, and to coordinate all parts of the financial service of the state so as best to meet the needs of the people in North Dakota. We live that today. And not only because it's in our founding documents, but the structure of who we are would not work without our 91 financial institutions in the state of North Dakota. As I go forward here, you're going to see we don't really get anything done without the partnership with them, with our banks and our credit unions. And I'm speaking about our community banks and our community credit unions. That's who our partners are. So a little bit of quick history on the bank. We founded in 1919. We were really founded by a bunch of angry farmers. That is what led to the formation of the Bank of North Dakota. At the time, North Dakota was a wheat state. We produced pretty much all wheat. And all of the control on the shipments and the prices and the interest rates that these farmers were subjected to were out of Minneapolis, Minnesota. Nothing against Minnesota. We love our Minnesota neighbors. Just at the time, that's what was going on. And enough farmers in North Dakota, over enough time, felt enough pinch around that they formed a political party, worked with the legislature, worked with the governor at the time, and did the work to form 2 for-profit entities that are very unique and one of a kind in the nation today, and that is the Bank of North Dakota and our state mill and elevator, which mills our grain for the state and helps as much as it can move the crop prices up for our farmers and ranchers. Both are still in existence today, and both have served our state very, very, very well. A little bit of a timeline. So in 1919, we started with $2 million in capital. That's what we started with. And you can see we're all the way, we're at $1.2 billion in capital today, and we're about $10.6 billion in assets over that 106-year period. But the story within there is really, really neat. So you can start with the Depression in the 1930s. Really, that's where Bank of North Dakota really started its mission of being there for disasters of the state. The Depression was a disaster for the state of North Dakota. Agriculture was heavily affected. There were farms being foreclosed on. The Bank of North Dakota at the time stepped in and bought those farms from the banks and then rented them back to the farmers and ranchers for $1 at the time, and gave them time, several years, to recover, operate that farm and ranch that had been in their family forever, for them to recover, and then when they were recovered and they could get banking again, they sold them back to them at a below market price. Teachers in North Dakota were started to get paid in warrants rather than cash. And the teacher would have to go to their bank and transact the warrant, and they'd get charged a 15% fee at the time. So it was a 15% haircut to the teacher's paycheck. Bank of North Dakota took over those warrants and transacted them and ate that 15% fee so that our teachers wouldn't be affected. You can fast forward to the 60s, and currently we started offering student loans. It's the only thing that we offer direct, not through our banks, and the only reason we do that is because our banks don't want to do student loans. The federal government was in them, then they're out, and it's kind of a mess on a national-wide basis. So we've stayed in student loans, but it's the only thing we offer direct to consumer. Everything else goes through our banks and our credit unions. And I would say this, if our banks and credit unions in the state ever decided they wanted to get in the student loan lending game, we would pull back and start to partner with them, because that's a much better business model for us to always work with our banks and our credit unions. Floods, disasters, wildfires, we've had many of those, especially in the 90s and through today. We've been there during floods, we've been there during disasters with special loan programs, 0% loan programs, unsecured loan programs, below market interest rate loan programs to help people rebuild their homes, to help them rebuild infrastructure. During PPP, we worked with all of our 91 financial institutions to facilitate PPP out to small businesses during 2020, and we were awarded the state in the nation that did the most per capita PPP, and I like to think Bank of North Dakota had something to do with that. So just a little history on the Bank of North Dakota. Here is our governance model. Here's really how it's set up to work. I started speaking about this a little bit earlier. So we got our state legislature, our Senate and our House, and they're really our quote-unquote shareholder group, right? What they're really concerned about are dividends from the bank, because we are a for-profit entity, okay? We make profit and we return dividends back to the state. We're accretive to the general fund. We do not require appropriations from the general fund. We don't spend any general fund dollars or any appropriated dollars. We instead borrow the state's deposits. Okay, we leverage that through that magical leverage in banking, and then we make our net profit and we return that in form of dividends back to the general fund or back to the people who own us. So our shareholder group are more interested in the profit and return that Bank of North Dakota can give, as well as the mission and strategy and everything like that, and really the dividends, because at the end of the day, we're a financial tool bolted on to the state's mechanisms. The Industrial Commission, which I introduced you to, that's our independent board of directors, and they provide oversight of us. They choose who is the CEO, what to empower the CEO with, which is the most important factor of really any board of directors out there, private industry or not. They do strategy approval. They are in the credit decisioning process over certain dollar amounts. In our case, over $25 billion in aggregate lending relationship. The governor and the attorney general and the Ag Commissioner, they vote on that credit, and sometimes they turn them down, sometimes they approve them, just kind of operating like a normal bank. They also set our dividend policy, they also set our capital expenditure policy, so they truly operate like a legal board. But these three elected officials, as you would expect, are extremely busy. They can't donate an entire or a lot of time to overseeing the Bank of North Dakota or the state mill and others. So we do have an advisory board that is appointed by the governor, and that's 13 individuals from different industries in the state. So we've got key bankers on there from the state, key credit union leaders, we've got officials and CEOs and CFOs from the oil and gas industry, from agriculture, in the construction industry. It's a nice, well-rounded board that we go to first, and they're part of credit decisioning, they're part of strategy oversight, they're part of everything. Essentially, everything goes through them first, and they, with executive management, they make the recommendation to the Industrial Commission on decisions like these. And then, of course, we have executive management, which I oversee, and we do the strategy and the execute and the report. We're structured like a private $10.6 billion bank. I'm the CEO. I have a chief credit officer. I have a chief financial officer. I have a chief risk officer. I have a chief human resource officer. I have a chief fintech officer. I have an executive team, and then down through the ranks we have our own credit underwriting department, our own business bankers, our own enterprise risk professionals, our own loan operations, deposit operations, all the things that how a private bank is structured. We are structured as a $10.6 billion private bank. We are overseen, we are audited. Now it's nuanced, right? Technically, we are not subject to federal regulation that banks and credit unions are subject to because we're owned by the state. We're chartered by the state. We are not federally chartered. We do not offer FDIC insurance because we don't go out and get deposits from the street because that would be direct competition with our banks and credit unions. We would never do that. It's against our founding principles. However, there are good practices in federal regulation, like allowance for loan loss considerations, like enterprise risk management. There are good things out there that the federal regulations have put forth to make sure banking stays safe and sound. And our 91 financial institutions who we partner with, they are all subject to FDIC, OCC, National Credit Union, federal regulation. And all of their borrower data is shared with us and vice versa. And so we, as a best practice, we do follow federal regulation. We really do. But we're overseen at the state level. And Lise Cruz is our head of North Dakota Department of Financial Institutions. I just met your head regulator here for the state. She would be his cohort in North Dakota. They do an annual safety and soundness exam on us, and then we are audited for our audited financial statements by Eide Bailey. We're also annually rated by S&P, and we maintain an A- stable rating, very, very strong rating. Here's where we start to get into the meat and potatoes of the core of Bank of North Dakota and really how it works. These are our verticals in business. These are our main functional business lines and units. And the primary one is right in the middle here, the participation lending at market rate. This is the one where we partner primarily with the 91 financial institutions, and we participate in loans with them. I'll get here in a couple slides on specific examples of how that works. For here, I'll just say that's $5 billion of our total $10.6 billion asset base, partnered through 91 FIs, and our participation rate is about 50%, which means on average we'll buy half of their loan. So if they have a $10 million loan, they want to sell us some of that on the back end. On average, we'll buy about half of that. What that does is it really leverages on top of leverage. Now let me pause and explain that. If you're a legislator elected, sitting there in your legislature, you have $1 of tax revenue coming into you from the tax code. You have that dollar, and you appropriate that dollar to some agency, right? So that dollar goes out to, let's say, the Department of Water for water projects. And then eventually water spends that dollar in your next annual or your biennium or whatever it is for that water project in line with that. What happens to that dollar while it's sitting there in transit, right? As it comes in and it sits before it goes out and gets spent. Well, if you don't have your own if you don't own the bank, you're going to have to put that in a bank so that it can sit there and wait its transaction. And if you put that out in a bank, which most states do, you're going to get paid some type of a deposit rate on that, and you're probably on the short end of the curve right now. You're probably earning 3.5%, but when rates were zero, you were earning 0.25%. And that short end of the curve operates like this, right? It goes up and down. It's whatever the Federal Reserve wants the short end of the curve to be. That's what you're subject to at the end of the day. However, if you own a bank, so that dollar comes in, you're sitting on that dollar, and you appropriate that dollar, and there's timing there. If you own a bank, then you deposit that dollar in the bank that you own. That bank can then create $5 to $10 off of that dollar. That's banking leverage, okay? Because I, as the bank that you own, as the CEO of it, I'm going to take that dollar and I'm going to lend it out, okay, at a leverage rate, or I'm going to put it in securities depending on what type of balance sheet I want to manage, depending on my mission. So I'm going to multiply that dollar, and then I'm going to return on the long end of the curve, which is much more stable and typically much higher than the short end of the curve. Today, it's like a 5-6% rate. But I'm going to be able to get that 5 to 6% rate over a 5-year time period. I'm not going to be subject to the Federal Reserve's up and down echocardiogram of the short end of the curve. So it's leverage and it's access to the long end of the rate curve, which is really the power of why you own a bank. And that's why banks make money. Okay? At the same time, when I'm borrowing that dollar and I do it right, while I'm leveraging you and making that nice 5-year return, you get to still use that dollar. And that's the key. The liquidity is still there for the legislator to make sure that dollar is available to be spent by water whenever it needs to be spent. There's all this timing of cash flows that we manage as a bank, and that's the real power of it. That's, when I say magical banking leverage, that's the banking leverage. But your state bank concept can even go one step further, because what I just described is what every private bank and credit union does out there. That's how they work. Your public bank can go one step further, because now we're going to leverage 91 financial institutions in our state. I don't know how many we have in New Mexico, but you can leverage all of them. Not only are we going to leverage loans on our balance sheet, but we're going to participate with you at an average of 50%, so we're actually going to double that. So now for the state of North Dakota, it's not just $5 billion going out from Bank of North Dakota, now it's doubled to $10 billion going back into the state, still from that $1. So it's really powerful leverage that you have. That's why I'm so passionate about the model and how much it can help a state at its core, because there's real power to it, real financial power just to the core of it, and now we can get into the extra things once you build that core model. Again, I mentioned the only direct thing we do is student lending, and that's at market rate as well. We got about $1 billion of student loans, and again, the only reason there's 2 reasons we're doing that. One is we're not competing with any of our financial institutions. But another very important reason is it's important for the state to help our North Dakota kids through college. So it's not just that we do student loans. We have a whole vertical where at birth, they'll start an account. We do a match program through our dividends. And then when they hit kindergarten, there's another college program where we'll match the parents' amount that they put in there. Then we're part of financial literacy along the way through the various schools and whatnot. We partner with our universities. We go out and provide education through them. We have events. We partner with Bonsai and many others. And then at the end of the day, we do student loans for North Dakota kids, no matter where they go to school. And so it's a key part in our strategic statement there is we want to help North Dakota kids all the way to get ready for adulthood all the way through college so that they have the best chance possible to be successful as adults. And that's a good mission-based thing for us to continue to hone in on. Disasters is a third vertical. And I mentioned those before. Droughts, storms, there's some cool stories. Minot, North Minot, where we have the Air Force Base, they flooded, took out tremendous amount of residences. I think it was 2011. And what we did is we came up with a loan program. We gave them $50,000 unsecured loans at, I think, 1%. And honestly, we didn't expect repayment of them. And I think we put out $50 million to that. Lo and behold, we were very blessed. We have certain things in North Dakota. We're known as the hardest working state. We're known as the coldest state. And but we also are known as a state where people pay their bills, and so we benefit from that. Today, we only have about $2.5 million left of that $50 million we put out, and it's been all repaid back with no loss. So we're really blessed in North Dakota with some of these things. But we really help them recover. This year, we're running 5 agriculture disaster programs. It's a record for us. Typically, historically, we run about a disaster program every 5 years, and now this year, we're running 5 in 1 year. So it's kind of a sign of the times post-2020, how volatile it's become, not just in politics and polarity and business and everything, weather, everything is just more volatile. And so we find ourselves being asked more and more to step into these disaster situations. In fact, we are currently running our largest agriculture disaster program right now. It'll be about $400 million in size. Our historical ones have been about $200 million. Now there, on these disaster programs, like the $50,000 I mentioned for flooding, that was through 91 financial institutions. We worked with them. They met with the borrowers because they know them. They facilitated the program money out to them. They were a part of the decision-making along with us on those. Right now on the ag disaster loans, it's the same thing. We work with our 91 financial institutions. They are our front line. They're almost an extension to a certain extent of staff for us, and we're almost an extension of staff for them because that partnership is so symbiotic. They benefit, we all benefit. Then we have legislatively directed programs. So I mentioned we're a $10.6 billion bank on our balance sheet. We got $6 billion in total loans, $5 billion commercial ag, $1 billion student loans, and then we carry about a $4 billion securities portfolio for liquidity management. Off balance sheet, we hold $1.2 billion in additional legislatively directed programs. Now here, the best example is, I think I have a slide on it here. The best example is school construction assistance. So the legislature will say, we want to build schools at a below market interest rate. Our interest rate is 2% in North Dakota that we like to build schools at. So the legislature will set aside, I think they set aside $500 million, I think it was 10 to 15 years ago. They give it to us to manage. So because it lines with our expertise to underwrite construction projects, whether they be schools or whatever, we're the best at underwriting the school construction project. What's the likelihood of it to be built on time, on schedule? Does it fit? What's their ability to bond at the end? All those things that we underwrite, that's our expertise. That's another thing that we bring. So we'll approve the schools to go in there, okay, and then we'll use up that $500 million. As they construct, we'll advance those funds and facilitate that from the $500 million that the legislator set aside. But as those schools pay off, let's say they finish construction, and they go out and get their final bonding that pays off this revolving fund, it'll open it up, then we'll approve new schools in. So that's a fund that we manage. It's the same thing with infrastructure. So think water infrastructure, sewer, roads, streets for various municipalities across the state. Legacy infrastructure, water infrastructure. We have a fund for clean, sustainable energy with the Bakken and fracking and shale and carbon sequestration and enhanced oil recovery and liquid natural gas and natural gas movement and all the things that go along with oil and natural gas and energy industry. This is the place where the state wants to fund grants and loans into research on new types of energy, right? Cleaner energy, energy advancement, so we manage that as well. You can see various, we go all the way down to very small programs. Some of these should probably be done away with, but, good state government, some things never die once you form them, but it's just part of it. But this is a key vertical of how we operate and what we do, because it's a real key partnership with the legislature, because we're a tool there to be used by the legislature, by the Industrial Commission, that lines up with the strategy of the state. Then we have our mission-based vertical, and this is where we get creative. This is our real magic sauce. Best example I can give you is we had a potato processor wanted to come into Grand Forks, and we were competing with them with Wisconsin, because Wisconsin and North Dakota were the only two climates that would support this specific species of potato. And this specific species of potato, the yields on it were amazing for much less inputs. A company out of Belgium called Agristo, it's all public so I can share it with you, we were in competition and we won the day. We won the day because Bank of North Dakota got involved and were able to quarterback the strength of the state. So we pulled together Commerce, we pulled together the local economic development agency, we pulled together the local municipality's mayor and city council, we pulled together the governor's office, we pulled together the ag commissioner, we pulled together special legislators because we needed a $30 million grant approved quickly to really win the competitive bid process, and we pulled together the private bank that was going to lead on the secured interest capital stack, and we won the day against Madison on a $500 million processing plant for Grand Forks. I could share 25 examples of you. That's where our mission-based stuff really comes in. Another example is rural housing. We have a problem in North Dakota with rural homes. We have really good people that qualify, great credit, great DTI in a rural, sub 5,000 community in North Dakota. However, when they go to buy that home or build that home, the appraisal doesn't make because they've got to go too far out for the comps, right? And ever since 08 and 09, the secondary market who buys mortgages, they won't touch it if the appraisal has anything wrong with it or if they have to go too far, if there's too much adjustments. there's really no capital market to buy those types of mortgage loans. So we partnered with the governor's office and came up with what we call our RINC program, which is we will buy those as Bank of North Dakota. So if you're in a rural community in North Dakota under 5,000 and you qualify with credit and DTI, you're a good credit-worthy borrower, but your appraisal has problems, we'll buy that loan on your 30-year fixed rate so you can get into that house. So just a couple examples where we get creative and work whatever the need is for the state, whether it comes from the Economic Development Agency, the local municipality, the governor, the ag commissioner, the Commerce Department, our private banks and credit unions that we work with. Whatever need comes in that is determined to be strategically aligned with the highest good of the state, we'll typically get involved and be able to quarterback and initiate the entire strength of the state and usually get something done there creatively that otherwise we couldn't get done. That's a big part of who we are. The new vertical we're entering into is fintech. And here's why. We're not only a symbiotic partnership with our community banks and credit unions, part of that partnership is we serve as a bit of an advisory role. This is kind of built over 106 years, where our banks and credit unions look to us for expertise, look for help, look for education on anything from regulation to you name it, right? We partner very closely with our North Dakota Bankers Association, with our North Dakota Credit Union Association, with our independent community banks in North Dakota, all the state banking associations. And what's going on in banking with fintech is consumers are starting to demand financial products more so and more so in the palm of their hand in their phone, right? And these non-bank, non-regulated fintechs are starting to take deposits from banks and credit unions. They really are. Our banks and credit unions are kind of behind the eight ball in terms of understanding how does the banking and the credit union industry react to that? How do they start to get up to speed and start to compete with that and start to win the day for your business as you're moving more money to Venmo and to Plaid and to Apple Wallet and Apple Cash and Walmart app and things that are not banking or credit unions? We are standing up a vertical to help them. And so that's why we're entering into an education of the B3 group. That's why we're into stablecoin with the passage of the Genius Act. Part of our mission is to lead the way so that our community banks and credit unions don't have to. We'll take that risk so that they don't have to, but it's always for the benefit of that partnership between us and them. So B3 Group around FinTech, it's a spring-fall education series that we're putting on at our expense for our North Dakota bank CEOs. And every spring and fall, we're inviting in national banks, national regulators. We've got the head of the OCC coming. We've got FinTechs coming, all as an incubator so that everybody can learn and grow. But at the end of the day, the mission here for us is to help our North Dakota banks strategize about how they're going to start to compete better. So it's not just that we're a financial tool. We've evolved into a place where we're a symbiotic partner with our banks and financial institutions. We're a strategic partner for the state, but we've also become a bit of an expert in these areas just over time and looked at as that expert with a strong reputation. And it's very, very important to us to maintain that reputation. You might have heard recently we announced Rough Rider coin. The Genius Act came out. This one caught us all by surprise, right? Since when does the government the federal government pass something that quickly out of the blue? So they passed the Genius Act, which pulled stable coins out of the crypto space. The crypto space, Bitcoin and whatnot, is great, but it's incredibly speculative and incredibly volatile, right? Well, they pulled stablecoin. Now stablecoin, we're going to start the framework to make it more transactional. It's going to be more of a transaction mechanism in the digital space. Well, everybody else, you've heard Wyoming, probably Frontier Coin, Circle, Tether, they're all working for end-user merchant adoption so that you, as a consumer, would be able to someday at point of sale, so if you're shopping at one of these fine shops in New Mexico here, you'd be able to swipe your card in US dollars, or you could choose to swipe it in some form of stablecoin. What do you get out of stablecoin? You get instantaneous, there's no float, so it's instantaneous transaction. You get 24/7, 365-day access. You get currency on and off ramps if you need to send the money globally. And it's an on the blockchain payment rail that is going to end up supporting, and it's going to replace all the old payment rails that are there, which are clunky and expensive and slow. So think ACH, checks, wires, all the old banking payment rails are old, clunky, and slow, and all this on blockchain payment rails are going to replace all this. Well, if everybody else is doing it for end sale, point of sale, merchant adoption, they're going around the banking and credit union industry. There's nobody now in the United States working on an on-chain payment rail via stablecoin specifically for the banking industry, except us. That's why we announced Rough Rider Coin. We are specifically working with Fiserv Core Provider to deliver the first of its kind on-chain payment rail technology specifically for banks and credit unions, for intra-bank transfers, for loan payoffs, for construction loan advances, for loan splits, for all the things. And eventually then, the idea is our banks and credit unions would be able to offer stablecoin-like account products to you, the consumer, their customer at the end of the day, and we're leading the way on that so that they don't have to. So hopefully that gives you a picture and a real-life example of the power that is a properly done state public banking model. It's not just the financials and the money you can make. There's a lot of other things that can be done if you go about it and do it in the right way. This is really the relationship. We're a gear in the middle. So we do stock loans, we provide bank services, we do participation lending, disaster programs. We're a growth catalyst, right? Our 91 financial institutions, they lead the way. They are our front line. Disaster program flow, they also are key feedback and street knowledge. Legislators, governor, what I've learned from them is getting that street knowledge of what's actually going on out in your state is one of the hardest things to do. I think in our meetings, it's been mentioned, there's an invisible left behind group in New Mexico. Who are the best ones to get you information and street knowledge of what's going on with that invisible group? Well, for me, it would be all your community banks and credit unions out there who have those as customers, because they're the ones meeting with them on an annual basis. They're the ones seeing them come in off the street to do a transaction. They're the ones visiting with them. They're the ones supporting the local, promoting the scoreboard at the school, supporting the local baseball team. They're the ones integrated in the community. They're the best source of knowledge. Our 91 financial institutions feed us a lot of information about what's going on in the state so that we can make better decisions. And then we have our state government, which is our legislature, our industrial commission. Those are the gears of really how we work. Here's an example in our core vertical of how our participation loan works. I'll go through these quickly. So we have a customer that has $1 million need and the market rate's 6.5%. Now our lead bank, not us, our Dakota, we'll call it the Dakota lead bank, they're going to look at that $1 million loan, they're going to underwrite it and approve it, and they're always going to stay the lead on it. They're going to be the one that always meets with the borrower, always accepts payments, they're always the lead, right? But they're underwriting it first. Now for whatever reason, they might not want to hold that whole $1 million. Now it could be banks have legal lending limits. Federal regulation requires banks to have legal lending limits, so they're not lending to one borrower. They're lending, spread out. This relationship might be over their legal lending limit. There might be some additional risk here that in their underwriting, they're not comfortable holding just on their own. They want to share that risk. There also may be larger balance sheet structural management that bank or credit union wants to do. They may want a little bit more liquidity on their balance sheet. And loans are not liquid, securities are. So if they are tight for liquidity, they need to do fewer loans and buy more liquid securities. And if they're tight, one of the ways is they can keep doing loans with their customers. They can sell some on the back end to us to have better liquidity on their balance sheet. Those are the three big reasons our 91 financial institutions participate with us. But now we will underwrite the deal as well. And we have a full underwriting team. We will independently underwrite on top of their independent underwriting. And there are times we tell our lead banks, no thank you. We might be too full on the relationship. We might not like the risk profile. We are beholden to our industrial commission and our legislature to run a proper bank. And running a proper bank means you structure the balance sheet correctly, but you manage the biggest risk in banking, which is credit risk. The risk that your loans will not repay you. So if I run a bank and I let credit risk get out of hand, I'm going to be fired by the industrial commission, as any bank CEO would and should be. So we're very, very cognizant of doing and managing credit risk to the best of our ability. So we will underwrite that. Now here's the real kicker. On average, we'll buy $500,000. The lead bank is going to get the 6.5% rate. We will only get 6.25%. That 25 basis points difference is given to our lead bank because they're doing all the work on that, right? That ongoing administration of that all the way through payoff or maybe even collections. And that's the motivation, additional motivation, and it's just the right thing to do, is to pay them a little bit for their time and effort because they've got to lead the way. So here's a disaster loan. Same $1 million example. We'll still both underwrite it. The lead bank will underwrite it, but market rate's 6.5, but we want to do a disaster loan at 3.75, so that the borrower only pays 3.75. Well, who buys down the rate from 6.5 to 3.75? And this is, again, where we get creative working with the legislature as a state public bank. So we might hold, depending on our strategies as the bank, we might hold all of those on our balance sheet and just buy down that rate difference with our dividends. We might take that earnings hit. We might work with the legislature on an off-balance sheet program where they would set aside appropriation dollars that could be used for that buy down of that rate for that borrower from 6.5 to 3.75. We might hold that off-balance sheet, much like the school construction and others. We may hold it on balance sheet, or we may do another creative solution. One of the most successful creative solutions that we have is our PACE program. It's the most widely used interest buy-down program in the state of North Dakota, and it's our baby. So that same $1 million loan example, if this is a PACE loan, if you're a business coming into the state and you're going to add jobs, or if you're an existing business in the state who is going to expand and increase jobs, depending on the number of jobs you create, you're going to qualify for a PACE interest buy-down on that loan. So if the market rate's 6.5, and let's say you're going to create 25 jobs in the state, you might get your interest rate bought down to 4.75. Now, we will buy down that interest rate through our dividends, but only half or a portion of that. The other buy down has to come from the local municipality. So there you're bringing in skin in the game from the local city commission or county commission who has to get the money set aside to support the PACE program. So it gives them buy-in into the game. And we have a lot of partnerships like that, which are the state, private, and local municipality that we've creatively managed in order to promote things like business expansion and job expansion and things like that. So all of this has ended up with that $5 billion in a business ag loan portfolio, but again, keep in mind our participation rate is 50%, so that's $10 billion out to the state, about $1 billion in student loans. We return in profit about $400 million per year back in net profit. We put a little bit to capital. We're sitting on nice capital of that $1.3 billion, but we dividend about $250 million of that back to the general fund every year. That's money for the legislature to spend wherever they want. Some of it is set aside to fund the buy-down programs, like the PACE program, like specific disaster programs, some other things. We do hundreds of millions in disaster programs. We got the $1.2 billion in legislative programs, and on our portfolio, we renew and originate about $2 billion per year in new or renewed loans out into the state of North Dakota. All that has led to, and I think Harold said it, he said it very well, our entire concept is based on the base concept of, if you want strong communities in your state, one of the best ways to do that is give them strong, locally controlled community banks or credit unions. They're great financial tools. They have that magical power of banking within the community. Again, they're the ones integrated in the community. They understand it the best. And you want Main Street businesses, you want agricultural operations, you want whatever fits that community, mining operations, whatever, that local community bank or credit union is the way to get it done. North Dakota, we have the highest per capita community bank in the nation at 50.9. South Dakota's behind us, Nebraska. I don't know where New Mexico ranks. I wish I had that data for you. I'm sorry I don't. But we're proud of that. And we know we're not all of that, but we know we play a big part in that with our model being Bank of North Dakota. In addition to financial institutions and state agencies, we serve a big role with our state agencies, our Treasurer's Office, our Department of Water, Health and Human Services, everything, right? We do payments disputes, we do Fed settlements, we do public deposit pledging, CDs, analytics. Some of these are for our financial institutions. We do correspondent services as well for our financial institutions, so a lot of additional work there. I'm going to end here last couple minutes. This is our strategic plan. Broke it down for you in just a few slides, but it'll give you an idea of our culture internally at the bank, because we operate, and this is really, really key, very nuanced in its language. We operate as a bank owned by the state, not as a state agency. If we ran this bank as a state agency, we would fail. There's no doubt in my mind. Because running a $10.6 billion banker's bank, and my banker and credit union, my regulator friends in the audience, you're going to totally agree with me, it's complex. To get all that done and manage all that interest rate risk and that investment risk and that structuring, that liquidity and that credit risk and that everything, right? It's incredibly complex. It's the reason you have good bankers running good banks. But we have to and must and need to continue to run as a bank owned by the state. Yes, we have to listen to the state. Yes, we have to listen to our shareholders. Yes, we have to listen to our board, which is the governor, the attorney general, and the ag commissioner. But we need the space to manage. Once we set our strategies, you've got to give us the space to do banking things, because that's how we provide good risk mitigation and good risk management. So our core values are, we're North Dakota proud, we have a passionate mission focus, we engage in creative solutions, and we're always there when needed with integrity and purpose. That's simply our core values. You can ask any of my employees, they'll tell you that's what our core values are. Our mission, which hasn't changed for 106 years, is promote North Dakota ag, commerce, and industry. But how we do that's really important, and it kind of summarized here with what I'm speaking about all morning here is we are first and foremost risk managers. We're not out being entrepreneurs and being crazy and trying to go for, 15, 20% returns on asset. We like a nice balance, 4 to 5% return on assets, and we like a nice balance, 16 to 18% return on equity, because we are borrowing that dollar. Remember the dollar going through? And our first and foremost duty is to make sure that dollar stays there for the legislators' use, for the citizens of the state's use as it's supposed to be. And we're putting on risk. We're getting return, but we're putting on risk on that dollar. It's very important we manage that risk appropriately. So first and foremost, we're risk managers. Then we're liquidity providers. There was a time in North Dakota's history in 2015, 2016, New Mexico might have faced this too, because you guys have a lot of oil and gas, where oil went negative, stayed there. We had budget crises, special session, they were cutting budgets and everything. Luckily, we were sitting on $3 to $4 billion in securities. We quietly sold them as the state's bank and just injected $2 billion into the state system just for liquidity purposes. So liquidity management is critical. We're growth catalysts and we generate a profit. Here's our core target. We want to grow to $14 billion. This is our 3 uniques. We're mission driven. We have a stable legacy. We're first responders. We talked about all that with the disasters and everything. And here's our real magic sauce. And the third one is we can initiate the entire strength of the state. That's where we can bring together whoever we need to bring together and quarterback a deal if it means that the state moves forward. There's our 4-year plan, and I'm going to end here so we got plenty of time for Q&A. We want to be strong in banking, strong in relationships, do good talent management, engage in fintech for our banks, and mission for us. And finally, here's what works for our model. Our participation with 91, our partnership with 91 FIs, absolutely critical. Our industrial commission, absolutely critical. They have hired, I'm the 15th, they've been very brilliant to make sure and hire bankers as their CEO that know how to run banks. We never compete with partner financial institutions. All of our mission-based activities and our proven process where we can initiate. Here's what doesn't work. We're still part of the state. State can be slow, stuck in some ruts. We do battle that, but we overcome it. We are viewed a little bit operationally as a state agency, so we've been working on that, really working to drive home. We really need more space to operate as a bank owned by the state. We have a lot of oversight from OMB and kind of redundancy with procurement and things like that, but just kind of minor things. We do have some legislative appropriation, and we have term limits coming. So we're about to get a whole new flood of legislators, so we have a tremendous amount of education to do on how this works. And finally, the captive deposit base that we use, that dollar, it is both a blessing and a curse for running a bank, because there are times when the state's going to need a lot of liquidity from us, and we have to stay prepared for that, so we always have to give up some things to do that. So there, I think I hit my time pretty good, hopefully, and I think we're ready for Q&A.